Well, hello, guys. Thank you for tuning in to Un Poco Mas. My name is Danny Dealz, and for executive producer Hurricane Lopez, we'd like to welcome you to the show. It is April 25th, 2023. It's about 5 p.m. out here on the West Coast. I hope it's a great night wherever you are. Would like to talk with you today about SoFi Technologies Inc., ticker symbol SOFI. We have earnings coming up on Monday. As many of you know, I do have a fairly significant position in this stock. I have for a couple of years now, been invested ever since the SPAC days. Really doubled down on my position in the fours and the low fives. It brought my average way down into the sixes, fortunately for me. I really love this stock long term, and I believe it is severely undervalued. And I believe we're going to see another quarterly earnings beat here on Monday. SoFi down 8 cents today, back up 8 cents after hours, just to land at $5.83. Right back where we started. Volume was moderate at 20 million shares. The day's range was 572 to 584, very tight range. So, sorry about the interruption. I want to get back to why I believe SoFi will be earnings again, why I believe SoFi is so dramatically undervalued, and why I believe this is one of the best stocks to buy for your long term future. Just to run through these in no particular order, reasons I believe SoFi has been hit so hard, and reasons I believe it's still a really good buy right now, anywhere under $6. The industry is inherently hostile to competition. That's just that's just a fact. Like the same analysts, investment houses, institutional investors that buy shares of most promising growth stocks are just not going to buy SoFi. They don't want the competition. If you're Bank of America or Chase or Goldman and you see SoFi growing the top line at 50%, and you see them adding a couple of million members every single year, you're probably not going to want to give them a buy, give them any good publicity, give them any, make it any easier for them to raise capital, anything like that. I just think the industry, the investment banking industry as a whole is hostile towards SoFi, and with good reason. They're the competition. Another reason is SPAC overhang. As we all know, Chamath brought SoFi. SoFi was a SPAC, and a lot of these SPACs were just pure garbage. I mean, if you look at stock like a pay like a PaySafe, I mean that stock went from like I think $17 down to like 60 cents or so. I can't even, it was a crazy ride, but their numbers were just complete BS. Their growth projections were just complete BS. Um, and SoFi got wrapped up in a lot of that when in fact SoFi has always beat their projections for the most part and has been very honest with investors in terms of under promising and overperforming. So I think the SPAC overhang has really hurt SoFi unfairly. Another one is just a overemphasis on stock based compensation. Um, we've seen that a number of times that they're not making enough, they're not making a net profit on a GAAP basis at the bottom line. They're increasing EBITDA all the time, but one of the overhangs on the GAAP a net profit is all the stock-based compensation. Now that doesn't affect your cash flow, but it does affect your net bottom line on a GAAP basis. So while the stock-based compensation has been really large in the past as a percentage of their revenues, the good news is that SoFi has been growing revenues at a really quick clip. So just since 2021, when they did under a billion, this year we can hope to do over 2 billion. So it's like the company's doubled in size, so even if the stock-based compensation remained the same, it would be, half of it on a proportional basis. So I've heard Lapointe and Noto both talk about this, about how it is going to come down to industry norms, but it is necessary for the type of growth and the quality of management they want to retain. So I think, again, that has been used as sort of an unfair way to clobber the stock. Also, another thing that you'll see is an overemphasis on insider selling. Yes, some insiders have sold, but Anthony Noto has continued to buy all the dips. If you go just taking a look at Yahoo Finance, that's not necessarily 100% up to date. But if you look at the insider transactions last 6 months, there's been purchases of 5 million shares, 27 transactions, and two sales for 281,000. So it's been a net hold or a net buy addition of shares for insiders. Excuse me. Sorry about the interruption there, folks. But also, just a note on insiders like, let me move my giant head over here. If you actually take a look at the insider buying and selling, they're doing this very intelligently, how you would want management to approach buying and selling an asset, even though it is their stock. If you look at these buys, they're all low. They're buying all these dips, and then the sales are all coming at the very top of these peaks after earnings. And this is SoftBank dumping the $43 million sale. So this is buying and selling is very logical. It doesn't worry me at all. If you have a lot of your assets concentrated in one security as a manager there or as an executive there, it's only prudent for your own fiscal future to not have all your eggs in one basket. Like, even if SoFi is one of my favorite stocks, I wouldn't invest all my money in it. Likewise, if I was an executive there, I would not have all my investment holdings just in the stock because I happen to work at that company. You want to be diversified, you want to protect yourself. So, the fact that, as management gets stock options, that they sell some of that stock, if you actually look at the numbers, even the executives who are selling some of their stock, I think it was the secretary, CFO, they still retain a vast majority of their holdings. So I'm not too worried about that. Also, the trend, not your friend. Basically, if you take a look at the SPAC mania and then how that fell apart and then interest rates and then student loans, I mean, it's almost impossible to think SoFi would have been going up over the last year and a half. Like, everything's been getting hammered: growth stocks, SPACs, financials, you name it. And then you add in the student loans, you add in SoftBank, having to sell lot of their stake. It's just, the trend has not been your friend, and you really can't fight the market. And SoFi has been getting hammered on every possible front by external forces. So that's another reason the stock has just been hammered. That's not really unfair. It's just the way it is. Also, leading us into the student loan decisions by the government. Now, again, this is not, you can't make excuses. SoFi's done extremely well on their numbers. Without student loans. But if they had student loans and they've still diversified and done all this other stuff, SoFi would be making a significant net profit already. But it's just been one of those things where this came out because of COVID, and they just keep renewing it and renewing it because it's popular with Democratic politicians and young voters, basically. But it's not really good for your fiscal health, as even as a student loan borrower, to just keep kicking the can down the road and not paying your bills, because you're still going to have to pay this money back. It doesn't just disappear. So in any case, this is just a short-term, like 3 month look at the SoFi chart, and you can see it's creating a very nice little wedge. If you look back over, oh, I don't know, all the way back out to December of 2021. This is range bound on this top line. It tests one, two, tests the line three times, tests the line once, twice, three times here, and once, and then it's been riding under this top trend line. And then, of course, from the bottom, there really hasn't been much room to go down, but you can see SoFi's earnings just rides along these support lines, pops up, and then no matter how good earnings are, seems to just be beaten back down. Just another reason I think SoFi is a little bit undervalued, or quite a bit undervalued, is just as an example, these companies here, like, it's grouped with a lot of companies that are not of the same quality, such as, when people also watch just upstart and Affirm. These are other fintechs, but in my opinion, next to SoFi, they're garbage. They're not diversified. They don't have as good management. They don't have as good a customer. They're just much more simplistic. And then, there's other companies in there, good companies, bad companies. They're grouped in with PayPal and Ally, who are both, good, profitable companies. But they're also grouped in there with a lot of other SPACs like Lucid and Palantir. Those companies tend to lose a lot of money. So just grouped in with a bunch of sort of non profitable, risky investments, which I don't believe SoFi is risky, but that's how it's grouped. Um, and then another one is the short term call options. This happens every single week. I haven't even looked at this, but I'll just guarantee there's a bunch of $6. Yeah, okay. Again, you don't even have to look. $6 calls for this Friday. There's 9,300. The open interest is 21,000, and they just dropped 30% of their value. The 650 calls, which there's hardly any of, thank people aren't stupid enough to do that this week, which they often are. Those are down 50%. So market makers have every incentive to kill all these calls at $6. And they do this week after week after week. And there is no, we're hoping for like a little bit of a run up before earnings, but, earnings is on Monday. So that's the catalyst. I have no doubt that market makers will do everything in their power to kill these $6 calls. They're just dumb retail investors keep buying these short-term calls. Only sell calls, collect premium, make time decay work for you, not against you. You're throwing your money away week after week after week buying these short-term calls. Another thing you could go into here is the short interest. SoFi has a very significant short on the stock. Um, so it's saying the short interest of the float as of March 31st is 12% on Yahoo. Let me zoom out here and just take a look at the short interest on another site. Short score is coming up as 68, which is very significant. The short interest has increased from 10% to 12% over the last 3 months. The free float on loan has decreased to 17%. Shares on loan is 132 million. Cost to borrow 0.89, utilization is 64%. So while there's not going to be any big like short squeeze, there could definitely be some buying pressure if shorts start to cover. So what can we expect on earnings on Monday? I'm just going to give you my quick and dirty opinion based on history, based on how SoFi has handled their business thus far. I'm looking for a net loss somewhere in the neighborhood of 15 to $20 million, which I believe would represent a loss of about 2 to 3 cents per share. Analyst consensus is 7 cents per share. I only lost 5 cents per share last quarter. I believe we're going to do at least that, if not better. I'm looking at 2 to 3 cents per share loss this quarter, which would be a significant beat if we actually have student loans start back up this year, which is nothing we could hang our hat on, believe me. Been talking about student loans starting back up for the past 2 years, and it simply does not happen. But if we could get that, if we could get student loans starting back up, there's absolutely no doubt that in 2024, SoFi is going to be profitable all year. The loans are doing very, very well. They loan to well qualified borrowers. They also are growing their deposit base very, very quickly with their competitive interest offering, and almost all of their customers that go into their banking, or a great majority of them, do direct deposit, and that's leading to very, very substantial depositor growth with SoFi, which allows them to make more loans, keep more of those loans in-house, and realize the profits between the spread on the interest they're paying to their depositors and the interest they're charging their borrowers, which, they're paying the depositors about 4%, and they're, charging the personal loan customers, 13, 14%. It just doesn't, it's not a really, really complicated business. If you're holding those on your books, you take away the bad loans and you're still making a great spread. So I really like the SoFi stock. As you know, I have been a big SoFi bull, averaged way down for many years. I really like management, really like Noto putting his money where his mouth is. continuing to buy the stock. I look forward to earnings on Monday. Please comment down below and just let me know, what do you think earnings are going to look like? What are you looking for? Positives and negatives. What trends do you want to see continue? What trends would you like to see SoFi improve upon? Do you think there's a chance we could actually see a net GAAP profit this quarter, as in Q1? I really think it's fairly a long shot on that, but I think Q2 would certainly be possible. And if student loan refinancing picks back up, I think Q3 we could definitely make a net profit. Give me your thoughts on SoFi. I appreciate you watching my video. My name is DannyDealz. The show is Un Poco Mas. For executive producer Hurricane Lopez, please give us your comments on SoFi down below. Thank you for watching and have a great rest of your night.